Hello, everyone, and welcome. My name is Darren Dittrich with Altan Insights, and over the next few weeks, we're going to be bringing you a series on sports collectibles as alternative assets, their kind of arrival, the sustainability thereof, and kind of the market that's rising to meet that trend. We'll have a number of fantastic guests, and we're excited to get started on the series with Darren Herman today. Darren is an operating partner at Bain Capital, and he's an active member of the card community. He had a podcast, Midlife Crisis Cards. He's a regular guest on the Collectible Daily, and he's an advisor and investor in many of the companies in the space that are kind of tackling that infrastructure issue and that infrastructure build out. So a terrific way for us to get started, and thanks for joining, Darren.
Hey, thanks for having me, and excited to be here.
Awesome. So, we've all kind of had to understand the growth and the rapid kind of maturation in the sports card and collectible space over the last, 18 to 24 months when things have kind of exploded. What's really stood out to you or surprised you in that rapid growth, Darren?
A good question. What stood out was, at least the high level to me, was how fast it grew. A lot of people will say it was growing before the 18 months. People were saying, record numbers to the national over the past bunch of years, slowly steady growth, but sort of the takeoff. And, I guess when you keep people home and they're going through their attics, or they're going through downstairs, or, they've got extra cash and they're looking to, roll it in ways that they may not have rolled it before. It's amazing how everything came into, the sports card, and it's back, and it's been fun. And I think for a lot of folks, cards have brought back, a sense of nostalgia during a tough time. And I think the last few years have been a tough time for a lot of folks, myself, like everybody included, across the world, and looking and smiling back at something that you did as a child and, as a teen, and as you grew up, brings back certain memories of positivity. And then on top of that, it's people have made a few dollars here or there, or more than a few dollars. And, why not use something that was nostalgic as an investment opportunity or alternative investment opportunity? And that's what we have today.
Yeah, and it's interesting you note the nostalgia piece, and so much of this for so many people started in attics and basements and closets, physically digging out things that they hadn't seen in, however many years. And very rapidly, it shifted to something that was kind of very physical, very, very in-house, to something that is extraordinarily digital and, does not require that same kind of physical component. What do you make of that kind of rapid shift, and what's kind of given rise to that?
So if you're referring to sort of the shift of digital cards and digital collectibles and things alongside of that?
Yeah, both that and the idea that even physical cards now are, easily changing hands digitally without necessarily doing so physically.
Yeah. So the vaulting and everything. So I think, let's take it to the former and talk about that, which is, the evolution of the CX of the hobby, or the evolution of the customer experience of the hobby. We've come a long way. And to be honest, this was my initial investment thesis early on, which is, when I got back into things, I'd been out of this of sports cards for a long time, but I was in it deep as a child. But as I was getting back in, I was just shocked at how bad or lackluster the hobbyist experience, or the collector experience, was to the benchmark of really good customer experiences of other parts of our lives. And as an investor, that's kind of what I study. I'm investing into great experiences that drive great consumer demand. And I almost felt like there's a super imbalance within the card market, specifically the card market, but it can be for any kind of hobby, similar, or comic books, you could take, things like that. And there's such an imbalance. And the fact that, like, we would go on, Instagram Live, or go on like Facebook Live or Twitch or whatever, and have to leave and go pay like via Zelle or PayPal or whatever then like come back in, wait in line, and then like, you know, it was just like a wonky and jiggery experience. And chances are, you know, many things just didn't add up. And so that the innovation in that change of experience is the opportunity. And that was sort of the investment thesis, which is kind of, you know, if we invest to make the CX of the hobby a better place, we'll get more dollars to come in, and we can grow, you know, a nice pot. And so that's kind of what we've been following, and, you know, investing in that infrastructure. Now, come the infrastructure in the customer experience, a lot of people realize that holding cardboard is kind of hard at scale, or probably not smart at the value that some cardboard holds.
Absolutely.
So like, you know, I can keep, you know, I don't, you know, I've got, you know, tens of dollars of cards. I've got thousands of dollars of cards. I've got, you know, whatever, but I also have some expensive cards that don't sit in this room. And a reason for that is because I'm a target. And so, you know, for some of these higher value cards that have been trading, you know, 5-figure, 6-figure, 7-figure cards, you know, chances are they're not sitting in the same location as most people. Historically, they sat in bank vaults usually. But in these new cases, they're sitting at the vault of companies that have emerged over the last few years within the general hobby itself. And by vaulting cards, not only does it, you know, enable safety around, you know, cards, not just for being stolen, but also protected from weather, from light, from other types of, you know, natural and unnatural, you know, potential disasters. But the other side of it is it makes it almost frictionless, if not frictionless, to be able to facilitate trading between or selling between 2 or 3 or 4 parties, however many parties within a respective transaction. And then the other side of that is the ability to tokenize or fractionalize, or, you know, whatever word you want to put into, and then make that card available to many parties beyond just a simple a 1-for-1 trade, which is, you know, where we've seen other companies come in and do.
Yeah. And you touched on something there that I think is interesting, and I wanted to hit a little bit more, is this idea of friction. And from your perspective, let's call it 2-3 years ago, on a scale of 1 to 10, you know, how much friction was there in the card market? Where does that stand today? And then where could that be in even, you know, 18 months time looking forward?
Yeah. So 18 months ago, I mean, I don't know the exact date, so maybe it wasn't perfect 18 months ago. Maybe it was like 15 months ago. You couldn't buy cards at retail value that weren't highly marked up. And so, you know, your LCS, if they had cards, you know, weren't the cards you wanted, but if they had cards, they were marked up to, you know, whatever price. And that was annoying. It was super hard for the hobbyists within the space.
Right.
It worked really well for the pure speculators or investors in the space, but that game only works if the price keeps going up over time, because you don't want to buy at the highest price and then have no one to sell it to at, you know, at peak pricing. We've seen, you know, supply chains open up a bit, and, you know, the craziness of demand come down a little bit, and enable, you know, LCSs, but also, you know, the larger mega stores that have historically banned card sales because of the craziness within the card aisles, that slowly started coming back, which has enabled, you know, many people, people to get their hands on cards that weren't able to get their hands on cards, you know, 15 or 18 months ago. You know, excited to see that again.
Yeah, there is I guess you could say a returning sense of normalcy, although it's not normal at all. But there's elements of, you know, some of the absolute peak kind of madness, if you will, has kind of subsided, and we're returning to what might more closely resemble a new normal.
A new normal and a healthier normal.
Right.
You know?
Right.
You know,
yeah. Once
a lot of people that are that have collected and purchased and invested and speculated, forget that markets are markets only because they go up and they go down. And, when anyone's a great investor or speculator or even hobbyist, when the market only goes up, because you can't be wrong if everything's going up. And we've only gone up the last, even in the public markets, the last 10 years. And so, at some point, if history is any indicative of indicator of the future, then we come down a bit. And when we come down a bit and then we start to rise again, that's where you get to see the good investors. That's going to be where, there's a lot of opportunity.
Yeah, that also, that moment will introduce a lot of questions that I don't think have been asked with the same severity recently, which are, questions around liquidity, questions around time horizon, questions around, ability to weather the harder times, and, what happens when other more traditional risk assets don't perform as well as they have, and money isn't kind of as bountiful as it has been, so to speak. And so, the ability to weather that sort of correction, we had a spring and summer correction, which kind of feels like a bit of a blip now, but surely a more serious moment will eventually come.
Yeah, which nobody wants it to come, but it's going to come.
No, and timing it is one of the trickiest parts. But stepping back, I guess, from kind of the day-to-day market movement and thinking at a more macro level, you have had a lot of interest in kind of the growing infrastructure in this space. And so, for you as an investor, what are kind of the key elements of, either companies or assets you're looking at as prospective investments, and, what kind of stands out to you in terms of opportunity?
Well, so, continuing on, so very thesis led, in the sense of we still have a long way to go to make the experience layer of the industry, fantastic. And, what the last 18 months have shown is that, dollars from investors finally have been able to flow in and not just make it sort of a nights and weekend industry. So when we think about, the financials of the card space, or the trading cards market or beyond, it was almost kind of like taboo. It was almost like a space where people appreciated, but were like, oh, my children do that. Like, I'm not going to put a lot of money there. And that's why, much of the infrastructure of the space wasn't built out as much of other sectors. And so now that there's been sort of a general recognition that there's true dollars, time and attention, within the card space, then the dollars have started to flow in from investors that probably never would have considered it, 5, 10, 15, 20 years ago. And so that's been very, very interesting to continue to build that infrastructure. And now for like the first time as well, we're starting to see the larger players just outside of the core space start to move into the space. And some of the licenses that have been historically wrapped up within some mega players for a while start to move around a bit. And so what's kind of nice about that is, the tree roots, have been one way for a long time, and now the ground's kind of shaking a bit, and new players are in the space. And I believe that that's healthy. I believe that's really healthy because it's going to create innovation. It's going to force people to be more competitive. It's going to force, the historical, oh, we would never do that, to, oh, actually, we got to try this, because if we don't, someone else is going to do that. And, it's probably going to upset some of the, super, sort of, legacy type thinkers within the space, right. But that's healthy. And so, I'm excited to see what a lot of those businesses can do. For example, Fanatics coming in, and not just doing things in physical, but also doing things in digital. I'm excited to see eBay wake up, and get super active within the sector. Let's see what Panini does. And in terms of the big titans, those three, and then you've got collectors coming back. Not just public market company that was flat for a while and now making some acquisitions and have new leadership. And, it's a super innovative team. So you've got like 4 or 5 companies, over, $500 million, let's call it, within the space that have been invigorated and are excited and have, inspiration that are going to bring, that's 4 or 5 companies that, we didn't have as invigorated 24 months ago, 36 months ago. And they were just pushing out, same name product, maybe a little bit different design, maybe a couple new players every year, whatever, new draft class, without much innovation. And so now the innovation's here. And so, I think we're going to see some innovation cycles that'll push the sector forward. And then the confluence of, physical and digital coming together, and the addition of NFTs, and we'll see where that goes, and the inclusion of AR and VR within the space, and some other stuff that folks aren't talking about yet. It's going to be there's a bunch of innovation, and it's exciting to be there.
Absolutely, yeah, and all of that new energy can ruffle some more purist feathers, but that's kind of what's needed to garner a new growing audience. And like you alluded to earlier, we all would like to see things continue to progress, and that's kind of how that happens, right? But and you touched on it earlier. Obviously, UX has traditionally been a very big impediment to that new audience growing and new money coming in. Are there any other kind of impediments that you see out there that are either not being addressed yet or are a little bit kind of behind?
To the growth of the space?
Yeah.
Well, so, it depends on, how much growth we want to see, right? And so, I think that for instance, let's see, grading, is grading holding back the space? I don't know, but is hand grading everything what we need to be doing, or can we use more machines and computers and technologies to help us grade better? And I've had investments there. Clearly, PSA bought 𝐺𝐿𝐴𝐁𝐷. There's other acquisitions happening in the space. We've seen 2 new grading companies come in over the last 18 months. That there's probably plenty of new grading companies, but 2 that have kind of gotten some traction and come in nicely within the space. And if you can create household grading or household grades that allow product to move back and forth easier because people understand what it is, that's potentially healthier. Although I don't grade all of my cards, so don't necessarily need that. But the key thing is, can we make can we get more buyers into the ecosystem? More money comes in. Can we get the existing money to go larger, and keep everyone having fun while they're doing it? And so that's where I see things going, and that's what would create sort of a super healthy ecosystem, is just getting more folks involved within the marketplace, which will just drive more dollars, and the more dollars for more innovation. And so that'll be healthy.
Yeah, and you touched on such a key thing that sometimes it's easy to lose sight of, but having fun doing it, right? There's this race and this kind of arms race of sorts to turn trading cards into and be able to trade them like stocks, which is terrific in terms of market efficiency, and being able to transact with more confidence, and price discovery, liquidity, all those things, fantastic. But you worry a little bit, on the other hand, that you don't want them to become too much like stocks, because part of what makes it different, makes it interesting, is that this is kind of a destination for what I'll call passion capital, and kind of maintaining that identity is obviously kind of paramount.
Absolutely. And I think there's a role for everybody in the space, and as is for most industries. If you want to be a hobbyist / purist, then go for it. If you want to be a speculator, all the power to you. And if you want to do dabble in a little bit of everything, that's awesome. I think though that you have to what the scary part for me is when I see people taking like super aggressive, risky positions.
Mhm.
And they don't, and I'm not there to judge anyone. And, everyone has different risk, portfolio risk for their own, wealth and how they think about, accumulating wealth over time for themselves, for their funds, for their businesses. But there are certainly, no lack of folks within the sector that will take super high risk. And for, what I would say, they've seen great reward due to it. But they have to sort of manage that risk, over time and make sure that, they try and balance as much of that out, so that, they're not left hurting by spending, $200 on a card that's probably worth 10 cents. And so, would love to see that steam and heat sort of blow off the space a little bit, and come back down to reality. But, for those that are making money, awesome. But also just remember, portfolio theory and managing risk, and, is not saying that you can't take risk, but just manage it within some non-risky assets too.
Yeah, and that's exactly where I was kind of going is, coming from a traditional, financial background. When people think about portfolios, they think about it, not only in terms of potential return, but just as important, if not more so, is the risk at hand. And, that's one of the exciting things that while, collectibles are generally going to be thought of as a speculative bucket, as we get more data, as we get more statistics, as we get more track record, the ability for all of those things to inform what the risk return profile of different, collectibles looks like and how those do fit into a portfolio kind of from a more academic perspective, will allow people to really consider it as an allocation in their kind of, overall holistic portfolio. So,
Absolutely.
it'll be interesting to watch that materialize. But before we break, Darren, wanted to know, we've talked a lot about reasons for bullishness in the space, things that give you pause. I think you touched on it a little bit there in terms of, some of the speculative steam in the market, but anything else that you think about and gives you a little bit of worry from time to time?
I think that there's definitely a case to be made, and I don't know if we're there yet at all. People just getting tired. How tired can you get, if you're not a purist or a hobbyist and you're just thinking about cards, and at what point do you move on to something else? And, I think that, there's definitely, not one-to-one, but definitely some money shifting from cards into, and so not or, but and into, digital collectibles. And people that are chasing, wherever we can get the highest alpha. And, for a while it shifted from like eBay to OpenSea, or from, MySlabs to OpenSea or whatever. And so, that kind of, gives me pause, but I think, you have chasers in every market. And so, I worry about that only if you're being highly speculative. You may not have the buyers of whatever you may have bought, because they've moved on to something else. So there's that. The other side I would say is, what gives me pause is, I want to see like really good innovation on the card side. Like the art and the design of cards literally have not changed for a long time. Like still to this day, my favorite sets are the, Skybox basketball cards. And the reason for that was because they used design, like the white backgrounds with the colors, or the gold backgrounds with the dark colors. And, in the mid 90s, like those were awesome, or early 90s, like those Skybox sets were amazing. And today, Prism cards look like Prism cards. Like they're not that exciting.
They sure do.
They're not that exciting at all. And what's interesting to me is that printing has advanced so much in the time periods. We aren't seeing those advancements in designs. So what I love are like the independent projects out there that aren't sanctioned by many of the big folks.
Right.
but those tend not to have the same value as a Panini Topps, Upper Deck, whatever. But for someone like me who, yes, some of my cards are, for investment grade, but a lot of them are because I love the hobby. I love kind of those, I love the confluence of art and design coming together with sports, and so I appreciate those. And so what gives me pause is I would love a challenge to the big manufacturers and the designers within the big manufacturers to push the boundaries, because they have the resources to do it. They just need the permission to go and do it. And so I would love to see that.
It's such a valid point, especially in light of the fact that sports cards can be spoken about in parallel to what made fine art a legitimate asset class over the past many decades. So it would be good to see some of that kind of more artistic aspect return to the hobby in ways that maybe we haven't seen it as much in recent years. So it's definitely a valid point, and a fun one too. That it all comes back to the more fun, the better.
Absolutely.
Well, Darren, thank you. Thank you very much for joining us today on this first episode of our series. It's been tremendously insightful, and we'll be looking out for more insights from you in the future.
Hey, we appreciate being on, and thank you so much for having me.